Hey everyone, just doing a sound check. Give me a thumbs up. You're welcome, Carl. Awesome. Thank you, folks. Yeah, we'll be getting started here in just a couple minutes. Yeah, this is the chart up here right now. Rebuilt and ETF hacked Kathy Woods. The blue line is the rehack of that strategy. And the green line is the S&P. And if you look at ARK, it actually was down in 2020 more than the S&P. We never even went negative in 2020. So it's kind of interesting what you can do. So just a few more minutes, folks, we'll get going. And I'd like to get the room filled up to at least about 100. We're getting there, starting to jump a little bit. Welcome, everyone. David, Carl, Al, all you folks, Bo, I see you all the time. Appreciate you folks all showing up. Carl, Adam. Yeah, if you folks haven't checked out our platform, you really should. We covered 16,000 symbols. You can do all kinds of magic stuff with this, build portfolios, track as many stocks as you want. Does ETFs, mutual funds, individual stocks. It's not a charting tool, but it is a management tool. So it has a lot of things you can do. You can query our database and set up all kinds of queries looking for sifting through the 16,000 symbols, doing all kinds of really cool stuff. There's all kinds of reports and things that you can generate that on your customized strategies. It's really powerful. There's a 2-week trial on this platform, and we do have a couple things that you need to make sure you've signed up for. And the KendallReport.com, it's just a email captured. So what we're doing is getting your emails. I do have some special coming out on our platform, as well as some announcements. We worked until somewhat of the wee hours of the night last night on the TradingView offering, which is getting very close. I believe there's going to be 12 indicators, education around it, a lot of stuff that we're working on right now. So make sure, I will let you know, but make sure you sign up, because the only way you're going to find out about those offerings is to go to that location and go there. Let me show you where that is. This www.kendallreport.com. This is all you get. Just sign up for access, and that's it. So you're not going to get, and we don't spam you, and we don't do a lot of this stuff. I am working also on trying to get something together to do a weekend written blog type thing, some thoughts for the weekend, some other things that I'm working on. So if you want to get that kind of stuff, this is where you go to sign up. So make sure you've done that. Yeah, so I see someone said you check out the site. This is the site you want to go to. You can go directly to Portfolio Expert. You can find out a lot. There's actually videos, all kinds of stuff up there. So I'm just waiting for this room to fill up just a little bit more, and then we'll kick it off and get into today's live stream. And like I said, there's quite a bit to talk about right now. There's plenty going on, even though the markets are somewhat muted. We were able to make some stuff. Maybe we'll get into talk about some Kathy Casino's wild calls that she makes. I guess she's figured out something, which is how to stay in the limelight. Maybe she took a couple lessons from Trump. Being controversial, stay in the limelight. She's going to need it, because I think Arc K could actually ultimately go to $65. So we'll talk about a lot of stuff here. Just a few minutes. I'm not sure how to pronounce Kaas or something, Hazma. Contact us, and we'll be glad to reach out to you and see what you're thinking there. So give me 1 minute. Gonna go get Aruna. We'll get cranked up, and so get ready to go to the live stream. So bear with me about 1 minute, and I'll be back. Welcome everyone to the live stream. Appreciate everybody coming today. There's a fair amount to talk about, some things that may be a little controversial going on out there. You know, we see a lot of things going on with Delta, and you can't even figure out what's real or what's not real on metrics on that. It's very interesting. We've had so much noise around this situation that it gets harder and harder to figure out what's going on. And it depends on what state you're in. There's no one talking about anything here in Arizona, maybe because it's 114 degrees. Maybe that has something to do with it. Anyway, welcome again. And a couple things I want to talk about. We're going to do something that I don't normally do, but I think it's worth doing. I'm going to play a clip. It's actually a CNBC clip. It's about 4 minutes on the infrastructure deal with Steve Leeson, which I'm not necessarily a big fan of, but they go through, and there's some points there that I want to expand on that I think are valid points that were discussed in this video. I'll go through that in a minute, a little more setup before we get to that, but that is something that I think will actually give us some insight. I want to spend some time talking about this infrastructure deal, what it means for the economy, inflation, a lot of things going on. And of course, we got the inflation report this morning, came in a little softer than people were thinking in general. But it's interesting that the markets that should have reacted the most, such as gold and treasuries, are actually acting like inflation was as expected or higher. And it really wasn't that big of a miss on the downside. It was played up on the headlines, and the algos picked up on it early this morning, bid the market a little bit. It's starting to come back last time I looked. But the we're going to go into those details. I'm going to discuss a little bit more about continuing saga. I told you this a number of weeks ago. It's nice to be back on these long live streams because it gives me a platform to really go into more depth and to talk about what's going on here as far as the markets and the economy and those type of things. And, you know, it's pretty interesting. You look back on last year. When we go forward 1 year and we look back at this time right now, this could be, that contrast is even going to be more stark, believe it or not, I think, than it was looking back on 2020, because there's a lot of things that are likely to change. And I'll go into that when we get into talking about the infrastructure. So I got to say something before we get going here today. I'm just looking at my notes that I have here, and you know, I saw this report and I read it like twice, just the headline, then I looked into some of the commentary, and it says White House asked OPEC to increase oil production. And I'm like, what's going on here, right? Why would our White House be asking foreign entities to up oil production when we have the largest oil producing environment on the planet? That was proven in the last couple of years. So why would you do that, right? What is going on here? And you know, you know, there's such the current administration, maybe some of this is not really political. It's looking at the contrast. They hate fossil fuels, and that's obvious. They just did the infrastructure deal, which we're going to go into a lot of detail in, but they basically want to shut down U.S. oil for foreign oil, and it's almost like why they want to pay these guys, I don't know. It's interesting. So maybe you folks can like comment on the line. Maybe we'll have some dialogue around that later in this segment. As you know, I usually do about an hour and talking about what's going on, setting up the outlook for S&P and getting through the indexes and all that kind of stuff. And so let's do this. Let's go ahead and what we're going to do is get set up so that we can watch this clip that I was talking about on the infrastructure. I think it's interesting, but what it's really interesting about, it's not so much what they're talking about. There are a couple things, but there are some things that I think that will help us to understand at give me an opportunity to expand these things. So let's go ahead and we'll bring that up. I don't know. I got to say something funny. I don't know if you guys ever noticed, but the Boss and Dilbert, if you guys are familiar with that, Steve Leeson looks just like it. If you put his ears a little more pointy, it is the Dilbert Boss. Anyway, let's go ahead and take a listen to this and see what happens here. It's like I said, it's 4 minutes, 29 seconds. I may cut it off a little early. So let's go ahead and watch this.
Yeah, this bipartisan infrastructure bill is a pretty big deal economically. It just doesn't seem like all that amid all the other massive government spending going on all around it. Here it is in context. The government spent some $6 trillion on COVID relief in ways that, by the way, immediately move the GDP needle, like sending checks directly to people. Democrats are considering a $3.5 trillion reconciliation bill for a host of additional spending. By contrast, there's that little tiny $1 trillion infrastructure bill in the middle there. Looks pretty modest, and it will take time to have any impact. But this is the biggest infrastructure bill in a generation. Most agree, apparently, hey, both Democrats and Republicans, that the nation has over time underinvested in roads and bridges, rails, and other stuff like broadband and, of course, cybersecurity. So here's the good parts of the bill. It should mean higher worker productivity, which usually translates into better wages, more jobs, and better returns on capital investments, especially those places impacted by the actual infrastructure spending. The negative, well, comes as the bill pushes up the deficit, potentially crowding out some private investment and bringing the nation closer to, I don't know, that unknown of what its debt limit may be. Could also boost prices and wage inflation as more government spending chases what we know now to be a limited amount of resources, especially when it comes to labor. Now, Mark Zandi of Moody's Analytics, he sees it adding almost 600,000 jobs by 2025. The Penn-Wharton budget model, it adds just 0.1% to growth, but you have to be careful. The effects of infrastructure and government investment, they're difficult to quantify, either how much they add and, of course, over what period of time. But even in today's world, $1 trillion is a lot of money. And if well spent, I'll repeat that, if well spent, could have a positive economic impact. Andrew?
I know you don't like to opine, Steve, but I'm going to ask you to opine. Do you believe that this will be well spent? To answer your own question?
Look, I think what the deal is with government spending is we always build in an idea that it will be spent inefficiently in return for equity, right? So probably the private sector could build a better road than the government, but where would the private sector build those roads? They would build those roads where they're profitable, whereas the government decides to build roads where they serve people who probably are underserved. So government spending is always a trade-off between efficiency and equity. And I don't mean equity the way O'Leary thinks of equity. I mean equity as in, treating everybody in a similar way. And I always say this, Andrew, that, Delta can have a line for first-class passengers, but not the DMB. And sure as not much to be in the first-class line for
yeah, I'm going to skip forward just a little bit here.
And the board at the Fed thinking about what
this is, I think,
plans
interesting.
Are going to do or not when it comes to inflation and interest rates at this point, you think?
I think that unlike the criticisms of progressives in the Journal today, I think that's the biggest criticism of Powell and the Fed right now is that they have not adjusted their policy for what's been happening on the fiscal side. And I remember back in the Bernanke and Yellen years, they would say, hey, we need to do all this QE and keep interest rates at zero because the fiscal side isn't doing anything. Well, here the fiscal side has stepped up and the Fed has not reacted. I think the other criticisms of Powell.
Yeah, I'm going to stop this because this is something that I've talked to you folks about, is that the last year, if you recall, if you've been hanging around the channel for a while, I was talking about that the Fed needs the fiscal side to spend. And once Biden got in and they put Yellen in as the Secretary Treasurer, this actually opened up the floodgates. And now, and I'll go through more details in a minute. There's a couple more points, but I just wanted to jump in and talk about this because we're just seeing, some really crazy stuff go on. But it is true what he just said, is that the Fed's not adjusting their policy. They're staying very dovish in spite of all of this fiscal spending, because that was their argument. That was Bernanke, that was Yellen. We need more. And now Yellen's actually dictating and directing that spending. And so she's in full power there to move a lot of these dollars. And it's just interesting because is very true what happened here. There's a couple more things. We're almost through this video, and then I'll come on and we'll just go full on and talk about some of these elements some more.
In that article are kind of bunk, right? I mean, Powell is probably the most progressive Fed chair that certainly I've ever covered, and
That's
I think
for
maybe in
sure.
history of the Federal Reserve. He has dramatically shifted the mandate over towards the unemployment side of the mandate and away from the inflation. And maybe we're sort of paying a cost for that. But if you're progressive, that's what you have sort of angled for and been arguing for over time. The other thing on the banking system, U.S. banks, Andrew, as you know, are pretty darn well capitalized. And the idea that there weren't changes needed to Dodd-Frank is like, I don't think that makes a lot of sense. So on the substance, I think Powell wins the argument, assuming that he can get control of the inflation problem right now.
Okay. Yeah, I think this is something that the reason why I wanted to play that just kind of gets us all in a thinking moment about what's going on here. And this infrastructure is really, there's a lot of good out of this, okay? There's good things, but the problem is, the best I can find, somewhere around 23% of this bill is actually being spent on roads and bridges and that kind of stuff. Typically, when people think about infrastructure, that's what they think about. And that's not totally what's going on. This ends up to be somewhat of a welfare bill. This has a lot to do with, continuing, we'll call it universal payments to everyone. Child support, they're talking about giving, kids money from, the parents will obviously get it. That'll be interesting if you end up in a Britney thing where the parents, hey, I want the money back you spent that was given to me by the government when this kid gets 18 or 20. That'd be pretty funny. Well, hopefully you folks will be around to see that. I may not be around to see this one. But the point is that there's just a lot of, they talk about people infrastructure, and it's all about supporting folks. And I just don't see what's going on here and how all this is going to play out. And I'm seriously, I can't be more, this is not political, me being against what's going on. I'm just trying to reconcile it, because as an investor, as a market participant, I've got to figure out exactly how to help all of our customers, myself, all of you folks out there that watch the YouTube channel, figure out how to navigate through all this crud. And, the thing that's happening now, the infrastructure deal is small relative to the reconciliation bill, which is the big Green New Deal. This is everything coming at you big time, right? And that, while they're advertising it as 3.5 trillion, we're really looking at something even larger. I've seen numbers upward around, even adding the 1 to 3.5, that gets into 5.5, maybe $6 trillion. So let's extrapolate out what is likely to happen here from the standpoint of inflation and what's the impacts on the actual economy going to be. And this is where it's really going to get tough, because we're looking at probably one after another. I got a text, won't say much about it, but there was a list of all the variants as if they were planned, the variants of going from COVID to Delta to Theta to all kinds of names. It's very interesting. So I've got the list. So I'm going to see if it ends up playing out, if any of these names show up, and this was a real plan. But it appears that whatever's going on is, I believe right now, the current environment, and especially with the Democrats in control, what they want to do is they want to do something that matches up with Roosevelt back in the Great Depression. So they're taking this moment, this crisis of the pandemic, and actually building this big spending around this. And it's all about changing everything that they think needed to be changed. we go way back. You guys can go watch some of my videos going back over a year ago. And what you're going to find is I was talking about that this entire environment has been a social reconstruction. And when the terms, the Great Reset, all that happened, it truly was a great reset. We saw it happen, and we saw it through what the Federal Reserve did going back on March 9th in 2020. This is when they announced basically they're going to buy anything and everything they need to do to support the economy, support the bond market, do whatever it takes, right? We know this now. Hindsight, we also know that assets just blew up. They repriced everything. So they took it from where it was at the bottom of 2020 and now where it is now. And even just a couple hours ago, we punched out an all-time new high on the S&P. So I just want to continue a couple things here that I think is going to be interesting. I've talked to you a lot over the past couple months that I believe that the inflation numbers and the continuation of the inflation wouldn't happen until later in the year. Well, even on this passing of this infrastructure, there's absolutely no way. I mean, this thing is just passed the Senate. It's got to go to the House. They've made it clear they're going to combine the reconciliation and the infrastructure. Hey, it's the House of Representatives, and ultimately there's some things that have to happen back in Congress. It's government. You think this is going to get done in 3 weeks? You think any of this money is going to be out there? They still haven't spent money that was allocated last year. There's states sitting on hundreds of billions of dollars that they don't even know how to spend this stuff. So they're just, it's probably one of the most interesting historic times in the world that we've ever seen go through this. And, you know, everybody, I mean, everybody, all of us, you, me, everybody on the internet, everybody's trying to figure out what this means. And, you know, I've been teasing you. I hate to do this, but I am working on this thing and it is moving forward. But it's a big project, and I'm putting a video together based on what I think is going on here. And when you see I talked about this, I think last week. You know, Ray Dalio's the classical people out there, even like the Ed Yardinis, and I used to work with Ed. He was our head economist at one of the firms I was at. And, you know, all of this stuff, you know, everybody's looking at this prism of, well, how things have been forever. We'll call it classical capitalism. And what we're seeing here is this complete shift over to maybe even a shift in the government from a constitutional republic to more of a democracy, maybe not, I wouldn't call it communism, but a social democracy. And that's a lot different how those things are going to operate. And these are all the things that we're seeing with the infrastructure bill. This is the big push right now. And, you know, you got an infrastructure bill to rebuild roads and other things. It's got 2,700 pages in it. I saw a really interesting thing the other day is that the civil rights bill was approximately 10% about civil rights and 90% of giving government more power and executive powers. And so we know that this government, they're always going to want to get stronger, and we're in this big government mode that they're going to pack this thing with all kinds of stuff. So let's just carry this forward. And I think one of the things that is important to also look at is as we go forward with this thing, it's going to be, I think, really hard not to have massive inflation, especially if the money from last year gets spent, not even the new money that they're talking about. So from that standpoint, you know, I really feel like we've got a lot to look forward to. There's not a lot more I can say about that today. I did want to talk a bit about this and set this up, but I do believe that there is a huge shift in the economy, especially structural-wise in the U.S., and I don't think you can look at it through that old-school capitalism prism and come up with an idea. You can't be Ray Dalio talking about 100-year or 1,000-year, debt cycles. I mean, this is not even about debt anymore, because it's just all about fiat currency. It's all about, basically the government's buying their own debt. So it's monetizing everything. So it's something new and different. And I know people always say, I wonder how many, wish there was a way to find out how many bubble videos there are on the internet right now, because that would be super interesting. There must be millions of them, right? So anyway, I think I'm done with this little rant. I do these things. It's opportunity to kind of talk about some things that I think are going to be really important to watch as we go forward. So let's do this. Let's start to get into some of the technicals and really see what's going on here. But listen, we have to deal with this. Just in closing, this is something we have to figure out, we as investors, okay, and as citizens, and I know there's international folks on here as well, but from an American viewpoint and looking at what's going on, we've got a lot to digest and a lot of things that are going to change an economy, including in this reconciliation bill is massive taxes. You have to understand, we are still running on 2017 taxes, and a lot of the infrastructure right now, like it or not, this is still a Trump economy that's out there, and it's being operated within that, right? So that's when the last time there was any tax changes. So what we're going to have to see is what type of proposals, what type of things with capital gains, and who's the evil people, who's the wealthy, where do they start the cutoffs, all that kind of stuff. That's going to matter when it comes to the economics and the markets and all that stuff. If you don't think it's not, it won't. I can tell you, I've been around for 41 years. I started in 1979, just right before Reagan came in, and Reagan came in and changed, went from Jimmy Carter taxes to this new tax and just dropped taxes everywhere. We started the bull market. If you look at the charts, you can see in 1980 is when the markets really started to move higher, and you could actually argue that was the last bull market. And I'll actually show you that was when all this really started. So taxes do matter. Bill Clinton actually increased taxes a little bit. Obama did some things that after Bush, because Bush took the dividends and some other things that he played with, and then you came in, and after that you get the Trump deep tax cuts, and now we're going to go to something else. And listen, I've been doing this so long, this is just typical. So if you think I'm political, I'm not. I'm just talking about what these policies are going to mean. That's all we have to deal with. So let's do this. I'm going to go off screen here for a minute. We'll get set up. We'll get into some technicals, a couple of things I want to talk about in the long term. And like I said, I usually go around the first hour talking about this stuff, and we'll continue to move through the day. But I was able to get part of that out of me. It feels better now. So thanks for listening. And let's go ahead and get set up for the next level as far as what's going on the S&P, and we'll get through some things there. So let's go over to that. I'm going to need about a 1-minute break, okay? Just 1 second. It would help if I turn the sound back on. Okay, folks, we're ready to go this time. Yeah, sorry about that. Yeah, so what I want to talk about here is really get into a little bit of the longer term stuff. One of the things on this project I'm working on is really taking me back to history class and going back to, this chart goes back to 1872. And if you look at history, and I've talked about this before, there's actually a couple elements going back into the 1800s, 1877 range. There were a lot of things that go back, and even going back to Adam Smith and some things that are going on. If you're economic historian, which I've done a lot of study in this, is it really brings you into interesting points. So this chart that I have on the screen, I'll go full screen here, is really from 1872 up to current, and this is a quarterly graph, so it's a very long-term graph. But the thing that I want to emphasize here as we look at this long-term is it does appear that we're in this final leg up. There's a lot of videos around. This is 2021. You do Fibonacci cycles, and you can go back to this point, 233 years. You can throw all this stuff together, all these different cycles, and they all focus in on 2021. Well, that may be the case. I'm not sure that we're going to get that, but I am, like I said, this video should be out, I'm hoping, in the next week or so. And that is something. We'll take a look at Moderna. That's one of the things I'll look at here very shortly. But this whole pattern that we're looking at here, you're looking at that pattern that I was talking about. You're looking at the scenario I'm talking about with going and changing this to this new economy. And I really think this is happening, and it's likely to at least continue for a while. And it's really hard to reverse a lot of these decisions that are being made. And there's a large amount of the population that is willing to go along. You know, as you know, I mean, for the most part, people are somewhat lemmings, and they're not really, they're just kind of go with the flow, right? And that's why you see all the things that you see in the world right now, you know, vaxxers versus non-vaxxers and all this stuff. Everything is a competition. Everything's split. But we look at this, and this is a long, very long cycle. And I've been an Elliottician for a very long time, since around 1983, I guess, is when I started doing Elliott Wave. And wave tech is actually the art of utilizing the moving averages that I use and confirming wave counts. And that has been a very big part of my life, and the moving averages and the PPMs and all that stuff. So that's really the crux of the analysis that I've done in my life's work, actually, as it turns out. It didn't know it was going to be my life's work, but it turned out that way. It just kept doing good things and leading me down the trail. And to here we are, you know, literally 35 years later, and I'm still stuck in that same analysis. And it's okay, because it's very solid, and it's based in, and it's proven through the test of time. But this whole scenario that we're looking at is telling you this has been a very long cycle we've been in, and we've been through lots of panic. So I'm going to go through, you'll see, talking about 1878. There's some other things. There was probably one of the longest depressions at that point in time that there's ever been, from 1873 through 1879. And pretty much on this chart that we're looking at here, in this flat period here, Europe even experienced something much, much worse. It was very elongated in Europe. So the U.S. was able to come through this, and primarily through after World War I and Industrial Revolution, and all kinds of wonderful things happened at that time. You know, that's when Rockefellers and the Fords and all those folks were cranking money, the Carnegies, all that stuff. It was an incredible point in time on the planet. And we're going through another one of those transitions as well. So let's take a look at some of the shorter term stuff here I'll go back full screen. And let's break down just what's going on here. And you know, it's been really, really difficult. I have to say that we really are looking at a situation here from the standpoint of what's going on in these markets. I mean, this is just probably one of the worst markets I've ever seen from a standpoint of stock selection. Trying to figure out how to make money in this stuff is very difficult. We'll take a look at Moderna. There's a lot of, you know, you get these big high flyers, and I mean, the way money flows now, it's very aggressive in and out. So it's really one of those things that is difficult to determine. I mentioned this in last night's video. It is difficult to determine what the directional change is going to be, but I'm going to attempt to go into a little more detail here as we go through this section. You're going to find none of those answers on these short-term charts. Absolutely zero. Having said that, I am going to go back one step, and I'm going to go to like a 60-minute graph. And we did get off of that first hour, we did get what I talk about a lot is this RXT sell signal on an hourly, and then we should go sideways for a while. Well, that was pretty much, we spiked up the next hour and did a big reversal, but we just got a lot of volatility there, and that right after the reports came out this morning. Now we're back into consolidation, and now we have what I call a dragon head. They're going to attempt, it looks like, to try to push us higher. You got the PPMs starting to expand again across the board. So we'll watch this thing as we go through coming into the close today. We've got a couple hours to that point, but we'll continue to watch exactly what's going on as far as the patterns go on the hourly charts. But it looks like they're going to try to move this back up. The high so far has been at 40. This is the futures hourly, 44.43. We're trading 36. We'll see if we can get a retest of that high and if we can get through it or not. I really don't see some of that stuff going on. I'm going to go back to the daily here, and what we want to look at is, if we look at the grid for today, R2 was 44.40, R3 44.45. So we were able to get through R2. In last night's video, I talked about maybe an S2, R2. The low was 20, so we just went exactly to S2. R2 was in 44.40, so with the news, we were able to print just above that and get up towards R3. So the day is probably done. We're probably going to consolidate. Maybe we'll move back into this pattern as we go through the day. But let's go over to the SPX. Let's go over to look at a couple other things and go into a weekly chart, start to look at a little longer viewpoint of the world. Now, just going back, and this will be somewhat of a review of Sunday night's video, what I just suggested was that we would see an R1, maybe an S2. We did not get the weakness. There continues to be some things going on and I'm going to show you our database here in just a minute, but there continues to be some things going on that are somewhat concerning as far as short-term traction. The intermediate trends that we follow right now continue to be very stable. And the realities of what's going on here is that we are still in that uptrend, the intermediate mode. So I say you're not going to find any of the answers on the daily charts, but you are going to find them on the weekly and even the monthly. And I've talked about this a lot. We are not at a place where there's going to be a major decline of any sort. We're looking at a couple things here. We're looking at PPM1 on a weekly basis, 0.49, I'll explain this in a minute, 0.60 and 0.58. Anything over 0.25 is a trend. These are positive numbers, so it's an uptrend. And what I've talked at nauseum on this channel is talk to you folks about the angle of attack. And you can see the slope of these moving averages. And I prefer to use moving averages over any trend lines. I hate trend lines. I think trend lines are stupid. And that's me, right? I don't see the use of them. I draw them, they're subjective. And a quick side story, used to, in 1980, we had this guy, he was an architect, and he had these most amazing hand-driven charts. They literally were like 4 foot by 8 foot big charts, right? They were huge. And he had all kinds of lines and geometric patterns, all kinds of stuff. They were masterpieces. I would love to have those. Those things would be great mounted in a frame. And every time this guy would come in, it's like slap himself on the head and go, oh my God, it was the wrong line, the wrong trend line, it was the wrong whatever. And the subjectivity of those lines are what bother me. That's why I came to, that guy was probably one of the big influencers in me realizing that you should have seen all the fan lines and trend lines and everything on his charts. Like, and it was pretty hard to get rid of a trend line. Now you can just click on it, delete it, right? In our world, in the digital world, back then, you had to erase them, and it got really nasty. So he just had all these lines, but it ended up just to really tell me that that's probably not the way to go. You're always going to have the wrong line. This line didn't work. This one did work. That kind of stuff. So I went to moving averages, and moving averages weren't drawn by me. They were generated by the markets. I use simple moving averages, old school guy, but I don't like the exponential. I don't want to change the math to lean more toward the nearest, most recent price action. Just what happened was the WaveTech process that I developed back in 1983, 84 was really to figure out what the wave counts were, what the probabilities were of things continuing, and that's what big explanation for what I'm about to tell you. But this angle of attack that's going on right now in the moving averages just tells us this slope is going to continue. And in fact, as long as this is in what, and I'm not going to go through this, I've been through it many times, but we're in the trend maintenance mode right now. And this trend is going to continue. It's not going to roll over. The absolute demand line here for this thing is that 10-period moving average, 43.43, 100 points lower than where we are right now. That would be like the best buy the dip opportunity you're going to see for a while if that happens. The problem is it's not going to happen. We're probably not going to see that. There's other support levels on some of the shorter term charts that are driving that. But if we go over and just look at a monthly, and then we'll go through and look at NASDAQ as well. But here's the monthly. I mean, this monthly, now you can really see this angle of attack. And I'm going to draw in a couple of things just so you can see this a little better, because it really is what's going on here. It really is the driver of this entire trend that's going on. So I'll draw this in, but this is the 10, the 21, and the 40. So if you extrapolate these out, this is 2022, probably about over here is going to be roughly 2023. So here's what could happen that would tell us that we're going to go into some kind of correctional phase, but it is that the 10-month moving average, which is now up, if you look at the PPMs on this page, they're way over here on the far right. I'll tell you because they might be a little small for you to read. These are some of the most robust trend numbers that I've seen in watching the markets for many years. We've got a 2.99, a 1.77, and a 1.44 ppm 1, 2, and 3. And each one of these ppms track the moving average. So they're tracking the 10-period moving average, 21, and 40. Those are the three averages on here. What this is telling us is that that trajectory somewhere as we come into year end, if the market continues to keep this very slight slope on the daily, the weekly charts that I just showed you, we're going to end up somewhere around the first quarter, maybe being at a point where we might start a correction. And the interesting part of this will be is once we set up a pattern that is likely to signal a top, which is I wouldn't expect will happen until maybe first quarter of next year. Could happen sooner. Maybe this infrastructure deal could get passed, or the reconciliation bill could be passed, and that would be significant from that standpoint, because maybe new taxes, all the stuff I'm talking about, be enough to flatten out the market, but I don't think it's going to be enough to kill it based on these trends. And I can tell you, all of these, I could take you back, I won't right now, but I can take you back and I can show you exactly the calls that were made in 08, and the 2020 call was actually pretty good as well. And the way that our database is operating is also telling us a lot of things. And that's the difference, you know, in everything that I'm talking about here is there's a lot of deep math going on, because we're watching 16,000 symbols unfold, not just a couple indexes looking at some trend lines and going, oh, that's not what's going on here. We're deep into every symbol, and this encompasses the mutual funds, ETFs, bonds, and individual stocks. There's probably 6,400 actual individual stocks. The rest of the database is encompassing all those other things. So, but we look at things on a whole, what's trending, what's not trending, and all of that stuff. And it really gives a big insight. And that's what, you know, that's what I do in this channel all the time. And I think that yeah, and I just say a comment here just real quick. You know, what about sector rotation trend? Absolutely. That's what's going to happen, is the sectors will rotate. And that's, you know, I don't discuss that a lot, and I should actually bring more focus in that on the videos, because we have our quant stuff running on the individual sectors and within the sectors. So the same buy-sell type of percentage, buy-sell, bullish, bearish, are the same on the individual sectors. We have those metrics. They just aren't looked at really closely from that standpoint. And I should bring that out, because that is some of the analysis I do, and on occasion I'll bring that up. But that's basically what will happen, is there will be like this clear rotation from the standpoint of what sectors are going to be in play and which ones are going to run out. And you know, that is the key, not only the sectors, but you know, we talk a lot about just maybe the small cap versus the large caps, that whole scenario as well. We saw a nice run earlier this year in this, you know, small and the value running pretty well, only to reverse itself and just get clocked, you know, big time. So let's go ahead and take a look at some other things I just want to cover here. We'll go through the indexes now. I'll run through these fairly quick. I do this every night though, so it's one of those things where typically when I was not doing the long live streams like right now on Wednesday night, I would do something. All I'm going to do tonight on the broadcast was I'll get you set up for tomorrow's action and what's likely to happen for Thursday. We do have a fair amount of stuff coming out tomorrow. You get claims and continuing claims, and you have PPI coming out. So there will be some things to talk about tonight. So I will do a typical 20-minute stream later today once the markets have closed down. But let's go ahead and take a look at and go over and look at some of the other elements here. And the NASDAQ will be next. It's under a bit of pressure. We're at 15,000 level. I talked about last night that we're seeing this thing starting to roll over just a bit. And what I talked about was that we'll probably see, and it's not really happening today because right now the Russell has firmed up a little bit. So it is happening. What I thought is that the Russell will be a little soft, but it's not going to be as weak as the NASDAQ. So that spread will start to continue to go in. We'll go through that here in a minute. But the NASDAQ is getting down to where I talked about last night, which is the 19,954 level, which is the 21-day moving average. I discussed this in detail last night on the video. We got almost there. We look at the market grid. We just went a little bit under S2. The projections for last night that we're talking about were R1, S2, possibility of an S3. We haven't seen that much weakness. The low, like I said, was what was it? The low was 963, so we got almost down to S3. So we did see that weakness. It's come back a bit from those lows, but we're really going to continue, I think, in this drifting pattern. The PPMs are completely flat on a daily. PPM 1 is 0. And it's not going up and it's not going down. So that once you get to that level, the probabilities, when you're looking at these PPM numbers, when you get to 0, there's literally a 90% probability that the market will decline below that. Right now, the PPM2 is at 0.04. There is very little support being supplied by that number. If it got through there, we could end up, and I mentioned this also last night, that we could be down at 17, around 1732, something like that. That will be probably, if we continue and just close like we are right now, we're probably going to see the market grid actually turn down on the NASDAQ. When we finish today, we'll start to see some weaker numbers being projected on a relative basis within a range. And so that's likely to continue. Maybe we get a little downtrend going, but PPM 3, which is that 40-period moving average at 14,732, that number there is actually the number that will be the, sorry about that. That number there will be the actual number of that will be major support, right? If it gets through that number, then we have to go to the weekly. Let's do that real quick. And this is the NASDAQ futures we're looking at. So weekly, the 10-week moving average is also there at 14,671. So this is really what it's all about for me. Is when you start to do a top-down analysis, you're looking at a daily chart, then you go, what are the intermediate trends doing? And intermediate trends usually have a lot more, they dictate more of the larger trend and where the support levels are going to hold. So this just confirms everything I just said. 732, 14,732, somewhere 14,671 is the 10-week moving average. It's got a plus PPM 1 at 0.86. There's only a 30% probability it's going to get below that level. That means 70% of the time you can buy that number and you're going to make money. And, you know, those of you that are trading stuff, if you can put a lot of probabilities on your points of where your entries and exits are, you will get immediately better. And that's really just by using something like that, understanding what the probabilities are at that price based on this momentum is huge, because this whole angle of attack thing is actually an aviation theory. It's just like the wing lift, right? If it gets too high, it rolls over and crashes. Same thing if it goes down too much, it's the inverse kind of theory, but it will turn up if you get going down too hard usually. And I actually love all the videos that talk about we're at the lowest level we've been for 14 years. Well, that's probably a buy, right? It's not a sell, and it's always played out to be like this is a point in time where you want to be selling or at the lows. For some reason, that seems like a good idea. I saw some guy that's one of the, I had Bloomberg on for about 20 minutes yesterday afternoon, and some guy was talking about a metric of gold versus the stock market. It's the lowest level it's ever been. I almost took a snapshot of this thing, put it out on Twitter last night, said, okay, gold's a buy. And you can see gold's up $23 right now. It was just classic. I mean, and yeah, anyway, this guy's very annoying, at least for me to watch. David something or another. Anyway, but but looking at this is the magic number on the NASDAQ 14,650. We'll round it off, 670. That number is rising every week, so it's rising about 200 points. So it's going to be, right at 15,000, right where we're trading right now. We come into next week. It's that angle attack, that slope, and the PPM is still above its first, second derivatives. Everything's positive there. So there's nothing that you can actually look at. So let's go Russell, look at the spread. We're going to go off into U.S. dollar, 10-year U.S. dollar, probably 10-year yield curve U.S. dollar. Then we'll go into gold, and we'll hit some of the cryptos and go down that trail. And then what I want to do is make sure by the time I get through all that stuff, I want to make sure we can get to the actual, get to some individual stocks. Something I mentioned in last night's video I want to go through is actually bringing up our platform and showing you the moves that have been made, especially in some of these reopen trades. Because a lot of people go, oh, the reopen trade's going. Well, if you had our platform, you were already out of those reopen trades. Most of those rolled out. So, and the biggest problem right now is finding a place to make money. I mean, it's really, these are probably, we went from, we'll call it the easiest, I call it the dartboard market. A year ago, you can buy just about anything and make money, to now you try to buy anything, you're probably going to lose or you're not going to make very much. Maybe if you bought, very selective, right? Maybe if you bought Moderna before it rolled over, I don't even know what it's doing. Somebody said it was getting hit pretty good. But we'll take a look at it here just shortly. Okay, so hang in there if you just joined. We'll get through all that stuff. But this whole thing continues. So let's go to the Russell and take a look at, we got the weekly Russell. I mean, this is the broken record syndrome here on this. 2258, 2255 continues to be major resistance. This is a weekly graph that I have up right now. And this is just got nowhere to go. The PPMs are negative enough that it's going to be fairly good resistance. However, if we do get above that 2258 level, now all of a sudden 2270, 2295 is in play. And what we have to watch here, and this is a weekly graph on the cash, what we have to watch here is what's going on with these PPMs. If they start to get back above first, second derivatives, start to show that they're trying to bottom here. Right now, this is just a massive sideways since March. We've been 100% sideways with a slight bias to the downside. So nothing there at all. Let's take a quick glance at the daily. We'll look at the spread and we'll keep moving here. So at the daily, 2249 is resistance. We don't have any momentum up or down. This is about as neutral pattern as you're going to get on a short-term basis. So that 2258, 55, 58 level is your pivot number on the upside. On the downside, it's going to be at 2212. So that's basically the range you're going to be in. Let's take a look at the spread just so we can get a good idea what's going on there. And the spread is turning up. Let me just do something here. Yeah, so this is, no, that's the MIDI. Okay, hang on a second. Yeah, so the mid caps are actually starting to do pretty good against these things, and so for some reason I'm not getting my trade stations like quirking out on me. 1 second, let's try this. It's not letting me reduce this chart, so we're going to call that an error on TradeStation. But same thing, similar pattern is happening on the Russell. Is it's rounding off, it's starting to move up. I think you're going to continue to see the Russell start to stabilize, and it's in a better position, as you should have just figured out. Here we go. All right, so yeah, sorry to flash back and forth. It's just not giving me the box to expand that. All right, so let's move on. Let's go ahead and, like I said, we'll go to the 10-year, take a look at that. It's starting to back up. I told you last night, in the video last night, is that we're going to see substantial amount of resistance at what number? 1.37. The high 1.37.1. We're back. 1.3 is going to be minimum support, but more likely we're looking at somewhere around 1.28 now is going to be that support level. This is really interesting, and I was talking to somebody last night about this, and I think it's interesting because what is happening on the 10-year is you see all these blue and red and different color dots here. Those are cycles coming in, and they're cycle clusters. So what this indicator I built does, looks for multiple cycles. There has to be 3 or more Fibonacci cycles to hit off of some projection point that's in the data to map out. So the fact that we've seen this crazy sideways pattern in these, we're just getting a cluster of patterns that come up here, and we're getting yet another cycle. So this just a couple of days ago we got one, now we have another one. So the way that I use these cycles, we're getting a cycle for today. The first dot is the warning that there is a cycle, and so we're getting the cycle for today. And by the way, this is one of the indicators that's going to be released on TradingView. But this cycle, the way I use this cycle tool is once we get that cycle hit, which is today, then if we take out the low, then it sets up a mini cycle. And what likely to happen is to come back toward 1.25, 1.24 on this. So we're going to have somewhat of a pullback. We actually did see a little bit of a blip. We saw the 10-year open higher this morning and then come back in. The real story, once again, as I've been talking about, is really on the weekly chart. And the weekly chart is actually showing us that PPM1 is starting to turn up. So that is really significant. Now, I talked about this a number of days in my nightly live streams that I do. One of the things that happens is that the 10-week moving average is on a trajectory to cross the 40 period moving average. When that happens, it sounds like it should be negative. I don't know, all these golden crosses and all the different crosses, they're usually wrong, by the way. If you built an indicator on those, you'll find out they don't work very often. But in this case, when I see this happening, you think the short term is going to the longer term. That's negative. It's not. It's actually the point where a consolidation or a bottom is going to form around this crossover. And so this is important to understand. And you're listening to a guy who spent the last 35 years is studying these same three moving averages, all of these PPMs, and then building models and algorithms around these things to generate buy and sell ideas from that. And what's happening here appears to be probably the bottom of the yields. There's still some work to be done. That print that we had down to that 1.3, 1.27 or 28, that was it. 1.1, actually it was 1.13. Numbers are wrong. So we got down to 1.28. So we get down to basically 1.28, and that was it. Is that the right low? Hang on one second. 1.12. I'll get it right yet. And so we get down to basically 1.13. Now we're back at 132. We're about 20 basis points higher. And so I expect to see the next level on the interest rates move up ultimately toward 146, 149, but we're talking weeks from now. So we're going to see probably some consolidation. This 10-period moving average is down 1.66. That's going to be enough to keep this thing in check. And we've got a very narrow range on this. So if I go over to a monthly chart real quick and start to look at the longer term trends, this is where the support comes in. So the 21-week moving average is the point here where we're looking at this thing supporting on the 21-month moving average. I said week, month, and that number is 1.10, so we'll call it 11. So we traded almost down to that. We bounced. Now we have a sharp rising 10 in here, which tells us at 1.32, that's going to be a magnet for the market to get back to that. We're actually right at it right now, and we should see that slope is not going to change on a monthly. So that monthly slope, we're obviously not even the middle of the month, almost the middle of the month. We're looking at that changing, just see what the numbers are, about 4 basis points per month right now. So that number of 1.32 will be 1.36, and we'll move up the range where that's going to be your demand line around 1.36, and then ultimately move toward these numbers 1.36, 1.4 from that standpoint. And that's going to be basically interest rates are going to continue to inch up. Let's talk about some of the potential. This is a monthly, and I've talked about this before. The 40-week moving average now is at 1.74. That's basically at the spike high that we had. We got up to 1.76. So we're coming right into that number. It's still declining at a fairly good clip. So that's going to continue to decline. Probably somewhere ultimately 1.55, 1.6 is going to be major resistance. And then once we get through that, then we're going to be on our way to much higher interest rates. There's very little doubt that rates will be going up, and whether it has anything to do with Powell and gang to start to taper or whatever, that's going to be the thing. Now, there's a chart I'm going to show you while we're on here. Before I move on, I'm going to do two things. I'm going to go to the yield curve for a second, but I'm going to show you where some of these repo effects are happening. I'll go to that with these reverse repos. Let's go over here to the yield curve. Yield curve just stable here. The 1030s are increasing. That's the one on the right here. 1030 is steepening a bit. We get a slight steepening of 530. I would like to see the 530, and I think the Fed would too, back to about 1250, maybe 1275 on this thing. And that would be a little more healthy. It would actually help the financial sector. So somebody was asking about rotation of cycles of sectors. That may, if we can see this spread improve up to about that level, that's going to help the banks a lot. And I won't go through, I think I did last week. You can probably go back and watch the interest rate section from last week. I discussed exactly what's going on with the banking system and how the Fed looks at this and what it means from that level. So there was a little educational piece in there. Wish I could find a way to crop these things out and go. So, all right, so let's go back over here. What I want to show you, which I thought was really interesting, they are down a bit today. This chart that I'm bringing up right now, let me get off of this and get into a daily. This is the basically 13-week Treasury, okay? And you can go back into June, and this is the effects of the reverse repos. They're bringing the short end of the yields up pretty substantially here. They went from, if I put this up, I'll just tell you what the numbers are, and these numbers are too small to see on the screen, but we're actually went to a negative 0.03 negative, so yields went negative. This is when the Fed came in, said basically one of those old shit moments, and came in and started doing the reverse repos. And they continued to do those reverse repos, and they've got the market up to around 0.5%. Now it's 0.45. Yesterday it was at 0.50. So everybody's freaking out about the amount of repos or reverses that are being done. And this was what they were trying to avoid. They did not want that yield to continue to go negative. So they started taking money out of the banking system. I talked a bit about this last week. It's kind of a shadow tapering that's going on with the reverse repos because they're pulling money out. So while they're selling, they're pulling out. And so $1 trillion and even $2 trillion a day sounds like a lot of money, but it really isn't. Back in, just a quick explanation, is back in the 1980, they would come in and maybe do, 50 or $100 billion, but the balance sheet back in then was like 450 billion. So if you start to look at the percent numbers of what the Fed's balance sheet is now and these numbers, they're about the same, actually a little less. So that's really kind of normal operations. It just looks so big because the book of business has gotten so big or the balance sheet has grown to that point. So I continue not to see any of that be a real issue, other than they're just trying to control this. Last couple of days, it got over 0.50. Guess what? I haven't looked at the repo numbers. They're probably back off a little bit. We're probably looking at 0.25 to 0.5 is where they want to keep this. They don't want this 13-week T-bill to go negative like it did there for a minute. It was literally 2 days, about 2.5 days, and they got it out of there. So that's really what's going on there. Okay, so let's, we're going to go to the dollar, which is under a little pressure. The dollar's been, really pretty strong, to say the least. Let me get to the full screen here. So we're starting to top out a little bit. I'm going to go to the weekly chart. I've been talking about moving up toward this 200-week moving average, which is 94 handle on the dollar. I still think that's going to happen. We still have very positive PPMs. PPM1 is going to be the primary support there. It's at the 92.24 level, going up about 30 points per week. So we're looking at 92.50. We're trading 92.89. So there'll be strong support just under the market. But if you look at the PPMs here, PPM 3 is starting to move higher. Everything's starting to move up. So the dollar is likely to continue to go. And whether that means that the stabilization in the interest rates and everything I just talked about are going to be key and moving this stuff around, we'll see how that all goes. I am going to just take a quick look at I thought this was interesting, and this will show you, this is, I know we don't usually do a lot of Forex, but here's the yen against the dollar, and it's probably at an extreme. We're probably looking at the yen firming up, so if you're doing any Forex, this would be something that you can look at here, but the yen this is a weekly pattern setting up. This is getting fairly close. We still have pretty negative PPMs. There's about 2 or 3 more weeks, maybe a stability, and then we'll be able to find out whether that's going to continue or not. I won't go through any other currencies, but this is one I noticed that looks to me as getting pretty much at an extreme, just waiting for a couple things to happen there, and there's probably going to be pretty good opportunity in the pairs yen versus dollar. Okay, so let's do gold next. Maybe I'll touch on silver. This gold trade, this weekly gold chart is, if we can close back above 1763, which is a stone's throw away on a week, we're going to have a major upside reversal pattern. There may be some minor lows here, but everybody was throwing in the towel the other night, and I think this thing started in Asia. Let me bring up the daily graph here real quick. And I said it on Sunday night. I said it every night this week, and I'm saying it again. Gold is not over yet. This pattern is somewhat disappointing how this pattern broke down, but the action around this breakdown is very revealing. Now we're looking at the patterns for today, and I talked about this last night. We're looking at R2 1757.80, the high 1756.70. So we basically went to an R2. The low was 24, S1 1719. So we didn't quite reach an S1, but it looked to me that it's pretty obvious we're going to get there. Now the key number in this pattern is going to be the high that we printed at 1765 after the big collapse the other day. I guess it was the open of the collapse on Monday/Sunday night, and that is actually a real key number, because not only, let's see what that close was. So you got 1763 close on that Friday. The open was 1765. So your big pivot in this pattern is going to be that number. And what I'm expecting to see is this grid is going to start to collapse a little bit and possibly angle up. Now, things fell so fast here on a daily chart that the daily averages are this is a really strange formation, but what we should see is the 10-period moving average come down into around that 1765, so that's going to be the setup. We're looking at, this is Wednesday, maybe by Friday, but probably more into Monday, Tuesday of next week before we get this pattern set a little better. But look at the PPMs, they're turning up, they're still negative, but this whole action is actually really positive. So it's going to depend a lot on how this thing trades. Going back to the weekly chart, this reversal is going to be substantial. I did discuss last week, I talked about 1825 to 1834 was the number. We printed 1835. Those were major resistance numbers. Really, be honest, I did not expect to see this thing get hammered in reverse and trade down below. We did get an STX buy signal, so theoretically, we should head back towards 1775 R1 on the weekly chart and go sideways for a couple weeks, set up a bottom here. We'll see. Right now, it's pretty neutral. I don't believe any of our models have any positions. We exited, some of them we exited, I believe, on the sell-off of last week. So it was slightly profitable, but we're basically neutral as far as positions go at the moment. Let's go ahead and take a look at silver. Silver did not have the flash crash involved there, but we did see it spike down below the, on a weekly chart here, we did see it spike down toward the 22.95 level. We're back into the grid. 22.90 was the, sorry, I said low 22.95, 22.29, and the STX was 22.90, so we spiked below that, but we're back in the grid. We're trading 23.55, so we're trading almost back at S2 again. So that's interesting from that standpoint, but the trends are there's a lot of overhead pressure on this market, so it's a little bit different configuration from that standpoint. Don't really see a lot of stuff going on. Yeah, so David Ford, I'm not sure why the gold went down. All that's been publicized out there, there was a big order in Asia on Monday morning their time, Friday night, but that's really all that's been out there. Okay. All right, so this is going to be the plan. What time we got? We've got an hour to go in the stream. So the plan will be, we're going to, actually, even though I went on my long rant early on, the time is hanging in there pretty good. So what I'm hoping to do here, we'll do some cryptos. I'll tell you, before I do cryptos, after gold, I want to do crude. We're going to talk about crude because I think that's an interesting scenario. And then we will do Bitcoin and Ether, and then I will start to solicit some names from you. And before you start throwing stocks out, I have a specific thing I want you to talk about. Give me some symbols that you'd like to look at on the reopen trade, some things that are out there. I have a small list. I want to go through those just to talk about the reopen trade and all that, and where there might be some opportunities when it comes to that stuff. So we'll continue to go through that as well. So let's go ahead and let's do crude oil real quick, and so I can get a handle on that. Crude was down earlier and has reversed again. And let me go full screen so you can see that. So we printed down, if we just look at the weekly crude oil, the low's been 65.15. S2 for the week is 65.41. 69.64 is SR1. So we're basically just printed up to R1. It looks to me, and I talked about this, I think in a couple of video streams ago, is that we're going to get and stay between 67.35 and around 72 bucks, 71.95. We're going to get sandwiched between the 21 and 40. The fact that let me go to daily, just see where the ranges were today. Yeah, so you had, like I said, we were down earlier in the day. We actually traded 66.67, and R3 was 66.38, fell just shy of that, and now we're trading at 69.45, which is R2. So we basically have done an S3 R2. And what's interesting in looking at the short term, we're starting to see the PPM start to turn over. I talked about some of these crossovers of the moving averages once they invert, and especially when they don't have the downward momentum. We're setting up this bottoming pattern. So resistance on a short term, 69.90, rounding off 71.40. That's going to be your resistance with 71.95, which goes in line with that weekly 10 average that I just talked about. So we're starting to see this thing set up a bottom. I don't see any major declines coming into this. I'm going to go to a monthly real quick just so we can get it long term. We're in basically a secular bull market in oil right now. I saw somebody make a comment earlier that, they're trying to cut back they're trying to cut back oil when we need oil. We actually need oil. The government can't buy all electric cars because they can't make that many. The government has a lot of vehicles. Imagine your postal guy running out of electricity 3 mailboxes away. He's not going to get out and walk. Anyway, but this trend here in oil is very significant. PPM 1 is a plus 5.80. That means that there is basically a zero probability for the market for crude to drop below $61. And I know that's $8 lower, but that number is moving pretty substantially. It's moving about $4 per month. Like I said, we're not quite mid-month, but that $64, the numbers I just talked about on the weekly, that's going to be your major support. So this market has got a lot of power behind it. And ultimately, and I've talked about this before, I still think we're going to see 92 and maybe higher. This 200-month moving average up here is at 107. So we'll have to see exactly what's going on there. Yeah, I agree with you, Patrick. Okay. So we're going to go next, and we'll back up time frames, and we'll get into the cryptos. We're going to do Bitcoin. I did Bitcoin last night, so there's not a lot to talk about here, but we are seeing a lot of strength in this market. 46,328. I mean, what a nice run. In fact, I'm just thinking here that we could bring up our platform for a minute. So if we look at Bitcoin, this is just going to bring up our platform for a second here, and we're in this thing. This is end of day, so we're definitely looking at some upward movement here, and we've gotten traction on these patterns to really start to move the coin a lot higher, I think. We're looking at the potential. I'm going to slam this over to Optimized Daily here. This will give you a little better picture. But so we bought it 27 on this thing. And now we've got this thing up at, working at, this is end of day, so it hasn't updated. So we're going to see this thing just rocket here, and the PPMs are all very strong and going from there. So let's go back to TradeStation take a look at it on this level, you're going to see this, we're back above the 200-day moving average. I think we're getting fairly close to some major resistance on the upside, but let's take a look at the weekly. We're above the 21-week moving average, 44.076. We're looking at 47,467 as R2 for this week. Above that level is 49,248, and then the next number is 51. So this market is really screaming back. This is not the type of pattern that you would get if cryptos were going to zero. That's not the deal. So what I want to do is, I haven't put this up here, but I'm going to put the Fibonacci ratio on here, and there's a couple of numbers out there that I want to alert you to on crypto. 60,612 is a really big number. Now, if we get back above that, I realize we're 46. If we get back above that number, that's going to explode, and the objectives are going to be some crazy numbers: 85,000, 106, 120, 119, 044. So you heard it here. I believe that most of this stuff and talk about this regulation around Bitcoin is actually a positive. And the reason why I believe it's a positive, because it's legitimatizing the asset. And this has been a lot of pushback for how many years that it's not legitimate. You got everybody out there, even Jamie Dimon, who said that this was a joke, right, is now set up Bitcoin funds and all kinds of stuff at Morgan. So what's happening is the asset class is coming not into vogue, but into actually legitimacy. And that's why we're seeing what we're seeing. And these numbers maybe sound pretty crazy, I just talked about, but there's some really long-term stuff going on here that are not going to end. So a double would be probably a minimum. As I mentioned, the numbers are on the screen here. Let me go full screen, but you can see the numbers here. I'll just bring that up, but they are 85,049, 106, 162, and 119. So let's just keep this same chart up here, and let's go over to Ether. And Ether's running hard, man. It's really doing very well. We're looking at, on a weekly basis on Ether, it has gotten right up to the 3275 level, just above R3, almost 3304 is the RTX for this week. And I suspect this is all going to turn up. We stay up, but we're seeing monster. I mean, I can't even tell you how positive this trend is. We got PPM1 plus 2.32. Anything over 0.25 is a trend. Well, this is 6-8 times. This is a very powerful trend that you're going to see in a weekly chart. 0.282 on the PPM2, PPM3, 3.95. The key pivot number, this blue line here, is bring that up, that is 4,099. We'll call it 4,100. Breaks over that, then those same objectives like on Bitcoin: 5931, 7486, 8447. That's what we're looking here. All right. So here's what we'll do. Come back on screen for you folks. So good session so far. Thanks everybody for showing up and participating. I'm looking at a number of of things out there that are on the line. So here's what I'm going to do. Go off screen for a minute. You folks, I want a couple things. So I want to do this. I was thinking about doing actually a call-in session today, so I'm not going to do it, but I think one of the next live sessions that we do, we're going to actually have the ability to call in, and love to hear you folks actually ask me a question than just looking at this timeline. I think it'd be a lot of fun. I did one last year a couple times, and it was good. And so, so anyway, we'll go ahead and do that. Here's what I want. Give me some stocks for the reopen trade. I already have like Delta, ULL, CCL, we got Carnival, AMC. I've got some of those. But if you can think of a few other reopen trades that you can give me, put those on the chat. And then after I go through that, I want to talk about this reopen trade a bit. And then we can go back, and what we'll do is we'll talk, we'll look at some other stocks, and we'll watch the close together and call it quit and go from there. All right, so go ahead and I'm just going to put you on another screen. I'll give you like 5 minutes. Give me some stocks, and I'll go back and we'll do that. So it won't even be 5. Give me a couple minutes here, okay? Okay, folks, good job. It looks like you got some really good ideas here. I'm going to just write down a couple of these, and then we'll get ready to go. And appreciate the break here. So let's go through a couple of these. Give me a second. I just want to write down some of the ones that you gave me. All right, there's quite a few here. So let's just talk a little bit about the entire scenario of the reopen trade. So it's, it feels very manipulated from the standpoint of what's going on in the economy. It was interesting. I went to the White House, and it looks like it's like the White House has their emblem for Facebook, Twitter, Instagram. They got all their social media companies. So I made this comment the other day that and we're going to go through Moderna as well, and probably look at all of the vaccine stocks. And so I guess what I was saying is that these pharmaceuticals like Moderna, maybe I'll just do that first, are no longer public companies. They may be traded public. And I realized, Jay and I were talking the other morning, and I realized something, that they were giving away free money. All you had to do was buy Moderna at $63 last year when all the vaccine stuff was coming out, and now it's what was $460. I haven't looked at it today, but the point is that there was a lot of free money there. So as the government was paying all this money to them, you could have made a lot of money just buying and holding and playing along, doing the vaccine trade, right? There was a lot there, even on Pfizer and a whole bit. So so let's go ahead and let's go over and take a look and go full screen here. And what I want to do is go over to here and just put in Moderna. Take a look at it. Yeah, big reversal, huh? So this is the weekly. So we printed up all the way through RXT and just collapsed. Let's look at the daily here. Wow. So this is a big move for sure. Interesting enough, and I can't wait to get this stuff out on TradingView, but look at this, RXT sell signal right there on the big day. RXT was 450, 457. High 493.76, close 484. RXT sell, and here we are, 2 days lower. Now we're also taking out the 10-period moving average, and it's interesting. So here's, and we'll break this down a little bit because I want to talk about what's going on here, and I want to be efficient so we can get through a lot of these other stocks. But if we go down, maybe what we got to look at is go into an hourly graph here. Yeah, so this is what I was hoping to see. Hourly is trying to set up a little bit of a low here. And, I mean, we're starting to see this thing set up. It looks like we're about maybe 2 hours from a low, and then we're going to run back into these moving averages, which are going to put us back at, there's probably a 60 handle run here on Moderna back into the 400 handle. Now, I don't know if you guys, I've been obviously talking during the show, if was there news out on Moderna? Did they decide not to do the deal in Canada and make more vaccines? What happened? That's quite a bit of value to be taken off the top of the market, basically a 20% move in a couple of days. So if you guys know that, let me know. So so let's just go back and like I said, going back to the weekly chart. So it's interesting because Pfizer's down, but not those kind of numbers, right? We're seeing all of these things top out, which is sort of interesting. PPM1 on the weekly Pfizer is up substantially. We did get above RXT on the weekly. Let me bring that up so you can see where that is right here. RXT was 47.44 high, 48.57. We're back toward we're at 46.42, which was just above R2, between R2, R3 on a weekly basis. We also had this cycle come in here. We had a couple cycles. We had this cycle low come in right here at 716. That was down at $40. And now, we're up here at 48. But this trend looks very, very viable. We may end up, because of this, there was an RXT sell signal weekly Pfizer, even though we spiked up. So we should see some sideways action. This thing should stall from here. So let's go through Delta. Weekly, we did see it get above its 200-day moving average, just stall there. If we go back a year ago, when I was talking about the airlines and the whole Buffett trade thing that we did last year, which was very profitable, I think we ended up making about 120% on just the airline portfolio going back, and pretty phenomenal trade. But there's no trade in there. I've talked about these airlines are just really terrible businesses to be in. They're highly regulated. You got unions. You've got expensive equipment that breaks all the time. And right now you've got no employees that want to work, and some employees that may not want to work because of mandates. Who knows what that means for these business models. But overall, this did pretty well. What I want to bring up here, and I just want to get over here to symbols and just go to DAL. And I want to optimize this for weekly. So this is what this trade looked like. We bought in over here at the, let me just reduce this a little bit. Yeah, we bought in at 31.81, sold at 45, made 41% gain on this stock here. Not too bad. You're looking at this chart here. This is an interesting chart. I'll bring it up full. This chart, the blue line is Delta versus the S&P. So not a lot there, but there was an awesome trade there for 45%. There were even better airlines to trade out of, but we have exited back on. Looks like 621 was the exit price at $45, and going back to TradeStation here, we're 41. So not a big decline since then, but about a 10% decline. So we're starting to see what we're going to want to watch for. And if you have the platform, WaveTech is $3.18 a day. If you have the platform, you want to look for both the short term coming back in as well as the weekly. But I'm not sure these trades have a lot left in them. I mean, if we go back to 2020, that's over on the left-hand side of the screen here, we're at 55. And so, what was the high of this pattern here? 52. So we basically went back to 2019 as if everything was fine. Now the question comes in, are people going to travel? I think people are pretty enthusiastic about travel, but can these guys make money on their business models? And they have jacked prices a bit. They've done a lot of things, and they're just going to nickel and dime you everywhere. And depending on your status, it's costing $300 to $500, especially if you're going international. If the place you're going doesn't require a vaccine to get the COVID test and to get all those tests, you're looking at $300 to $500 by the time you get in, and take the test before you leave, all this stuff, so you can get on an airplane. It ends up to be a fair amount of money. So there's the travel. I think people are enthusiastic. People want to get out there and do that. It's pretty obvious, but these airlines are they're terrible businesses. So the big trade was last year. I'm not sure there's going to, just looking at things from a fundamental standpoint, I just don't see that happening. I did see something. Somebody said the business traveler, that is gone. I saw something interesting, though, on that. That's a great comment, by the way. But I saw a conversation that happened the other day that I thought was interesting along those lines. And what it was maybe the business traveler in and out, like doing the, especially international business travel, is what people are talking about, is going and staying for 10 days or 2 weeks, kind of a work vacation. Since everybody's working for remote, you just go there, you do what you have to do physically, and then you just hang around, and so you stay at places, so you have an opportunity. So, and I was getting the view of this was from one of the big CEOs of a hotel chain, and that's what he said they're seeing starting to emerge. So while travel probably isn't going to be like it was before, especially business-wise, international, there might be some trends that start to come into play, that maybe something like that could be interesting. So, all right, let's keep going through some stocks here. Let's go to CCL. Oops. Let's go to Carnival. That's probably the one that has the most going on. Sorry, my allergies are kicking in this morning. It's not supposed to rain in Arizona. It's raining a lot in Arizona. But Carnival really hasn't done much. If we go over to our platform, let's put in Carnival over there. It's actually interesting on an intermediate level. It's long. It's actually about break even, a little bit negative. It's riding through this. There's still enough positive underlying trends there to do something. If I flip this over to daily, I think you'll see something interesting. On the daily, let me bring that full screen, is the daily actually sold out before even the last high, so it really hasn't been much. These have been very choppy trades. There's been a couple small trades and that we've been able to pick up on, but for the most part, we're neutral here. But this pattern that's setting up for everything to be negative looks really bullish to me. Looks like we want to try to go a little bit higher, and setting up a pretty nice pattern, especially on the weekly. We're still negative on the PPMs, but we're coming into that pattern I was just talking about earlier, where, let me go full screen and maybe you can see this a little bit, is what we're looking at is that the $10-period moving average, 2481, 2637, it's declining pretty substantial. So is the 21, but the 40 is positive, and what this is the bottom pattern it sets up. So it would look like to me that this is going to be a bottom pattern, and I'm just going to say that probably the ultimate upside as far as it goes is probably going to be maybe back to the 200-week moving average here. So we're looking at, that number is 4237. So that's a double, right? So that would be your goal. Right now there's nothing in there. We're still haven't bottomed, but we're working on that bottom coming into play there. So let's do AMC. Keep going down the list. What time is it? 1234. AMC is interesting because of it being the meme stock, Wall Street bets, but we're into a range right now where we're going to see some stabilization. And I saw this guy, Jim Chanos, if you know who he is. He was talking a lot of smack the other day about how this stock is never going to go profitable. It's never going to be this. And obviously he's shorted, okay? So that's pretty obvious to tell. And there were some nice shorts up in the, we'll call it up in the 60 handle or 50 handle. There were some nice shorts there. But what we're looking at just from a technical viewpoint here is that we're likely to get sandwiched between 21 and the 10. Those ranges, 28, we'll call it 28.60 to around 43. That's pretty much the range. So maybe there's some good option strategies to do some straddles on those strike prices. Maybe do some negative strategy. Just try to block in that range and take the premium off of those options. Could be a pretty good strategy from that standpoint. PPM wise, very negative. PPM 1 is down 3.66. So that number is going to continue, and the market grid here is really setting that range that I just talked about. Around $40, $42 is going to be the upper end. On the downside, we're really looking at R2 27.74, something like that. So we'll look at Amazon. That certainly, let me tick off some of this stuff here. Before I do, Amazon has no current Fibonacci projections or anything. PPMs are slightly positive, so you have a slight upslope that's setting right on support, 32.71. That's pretty much bottom in the range, sandwiched between 27.71 and 34.65. Till we see these PPMs turn around, it's going to be locked, and it doesn't look like there's much positive here, at least on the intermediate trends. Take a quick glance at the dailies. Yeah, dailies trading down on the 200-day, so it needs a hold right here, and it looks like it should. There's a fair amount of downward pressure. If it gets through that level, then look to those numbers I just showed you on the market grid on the weeklies to be the key numbers from that standpoint. Let me just go back there so you can get that number. Yeah, so 32, we're looking at 32.71, so 32.34, 31.76. That's pretty major support there. If we just look at, that'd be a place to buy. But right now, this market's just not, it's not ready to go. So, somebody made a comment, if you want to do something about climate change, just close down Amazon, and everything will get better almost immediately. But the point is that the stock itself looks like it wants to go nowhere. That range that I mentioned is where it looks like it wants to go. So this is a monthly chart on Airbnb. Let me go over to weekly. That is weekly, sorry. Go to daily. Not much here. I'm going to go over to our platform just because we might be able to look at. Well, we got this on daily. Daily, the last time we did anything with this was buck at 189. It's actually neutral. No, well, I take it back. There was a buy signal in this pattern here at 150. And this is 3-2 daily. Let me put this on 1.2. Those of you that use the platform will know what this means. I'm going to be a little more aggressive on this. Yeah, so last buy here was at 145, it looks like. We can go right over here. 141, last buy 141.75. So it's long from there. Going back to TradeStation here, just so you can get a good feel for what that looks like. As on a daily basis, not much there, but PPMs are attempting to turn up and get some type of range going. All right, so let's do the weekly. Oh yeah, there's just not enough data here. It's too new of a stock. Yeah, so I do want to do coin. Once again, not very much data here at all. Nothing to look up. I'm going to probably have to go to our platform to get a better view here, but let's go over to daily. Yeah, let's go over to Portfolio Expert and take a look at this. So last buy on this was at 239.76, and I'm just trying to get to something that looks like anything we can look at to compare, since it doesn't have a lot of history. But that is the last buy there. We'll go back to TradeStation, take a look. So we basically bought it right off of this low here. Looks like it's trending higher, just not enough data. TradeStation needs to get more information before we can calculate all the PPMs correctly. But we're really looking at this thing getting to the 1.150 on the PPMs. So worst case is we're going to stay in this market grid area, 254, 284 in a broad range. My guess is probably S1, 266, 277 range is going to be most likely where you're going to stay, right where we're at right now, maybe a touch higher toward the upper end, which is the 284 level. So not much above where we are right now. But I think a lot of what's happening right now goes to exactly what I was talking about earlier, is that the cryptos are being legitimized, and now finally coin is coming into play. I thought, and actually it was pretty accurate, I thought we would go to around 200 when the offering came out, and we ended up, it was just ridiculous. I'm looking at the first day pricing here, and we had a high of 429. So I thought, well, we'll drop in half, then there's a shot, and we stabilized down around this level, 200, 230, so forth. And now we're starting to see it move out of this range. But a lot of work to do. If I'm right about the cryptos, that if you watched that section a little bit ago, then you're going to know that that's exactly what we should see. Everything move basically higher in here. Don't see a lot. I mean, getting over that IPO price. What was the open that day? Let me just look at that. The open was, why is it not giving me opening price? The open was 381, so we've got a ways to go to get back to that level. Okay. I got to look at this. PLTR thing is stuck in the sand. Let me go to a weekly here. Yeah, when we hit this low, it shows the low at 17. I always talk about, we actually printed in a 16 handle overnight. When it was back over here, I thought we'd go to 15. We did do that. This stock is just another one of these stocks. I think there's a lot of speculation on how these folks are going to do long term. I know it's an older business, been around, but I'm not so sure about that. But it's at least stabilized down here. There's really nothing to look at. I can't even, there's not enough data even to generate a PPM on here. Let's go over to Portfolio Expert and see if we can get something there. And yeah, so we look at this from a position standpoint, since we can generate it here. We built something into our software so that we can actually generate buy-sell recommendations 2 days after an IPO. So, or in a intermediate, the second week. So we need 1 week of data and then we can trade. We actually need 1 day of data. The next day we can actually potentially generate buy or sell signals. And it was a very unique process. I've seen nobody do it, what we do. I could make trading views so much better. I just can't figure out if I want to give them this secret and what we figured out. So we can start generating orders, like I said, 1 day, 1 week after the markets start trading. And I'm not going to give the secret away here, but I'm shocked. We figured this out in 1998, how to do that, and it had everything to do with, at the time there were a lot of IPOs going on, and we had a big institutional client that wanted to trade these IPOs and wanted us to be able to generate it. And my old partner David was able to figure it out. Who knows? Maybe he's watching. Hey Dave, sometimes he's hanging around. So anyway, but yeah, let's. This thing is actually got a buy signal on a short-term basis. It just doesn't look like there's much there. Let me just flip it over to a weekly. Let's go optimize weekly and see if we get anything there. Yeah, so on a weekly basis, we don't have any trades. It went in, let's see here, let me bring up the trade log so we can see exactly what it did. It bought at $10.40 on 10/12/2020, sold on 5/24 at 21. Made 109% on that trade. So, but no intermediate trade, short-term trades long. Maybe it will develop into an intermediate trade. A lot of stuff that we teach people to do at the platform is how to trade the stock on what we call multivariate levels, where you're trading daily and weekly, and you can do this within a portfolio, and it's really dynamic. It's crazy. You can actually take a typical portfolio and probably accelerate the returns anywhere from 2 to 3 times the returns you normally would get by just going into a multivariate environment. But this is, yeah, like I said, not a lot there. What time are we getting to be? 12 minutes to go. Let's continue to go through some more stocks. This has been an interesting one, Snap. And we got an RXT sell signal a number of weeks ago. And you can see it right here at 7:23. The RXT was 66.03. It closed at 77.97, signaling 2 to 3 weeks of sideways. We've done that. And now what's coming into play is the 10-week moving average, and it's starting to move up underneath here at the 69 level, coming up at $2 per week. So that'll be 71. So somewhere between 73, 71 is going to be a buy on this, and we should start to move back up toward the upper end of the grid, somewhere between 81 and 87. And whether we can continue, there is some very longer term objectives up here for this thing to actually go to 100, something like that. And that seems a little far-fetched right now, but certainly possible. David Ford, yeah, to answer your question as far as those multivariant, that's the beauty of our platform. We actually have a self-rating. The models, we look at exactly how the models are doing, so you can see it on an individual stock. So that's something you would see depending on the stock. There's 16,400 symbols in there, so there's a lot to look at. But you can do a query on the database to find those stocks that match the criteria that you want. So you could find a lot of those stocks really, really good. We have a number of power users out there that are doing a lot of queries. And the nice thing about the queries, the query updates every day. When our database updates, it's always looking and delivering those answers to you. So there's a lot of AI that's going on that's constantly tracking everything that you've told it to look at. And so that's the key element there. Yeah, so Jacob is asking a question about fundamentals. Absolutely, that is the case. So I'm going to bring up this sheet right here, and this is fundamental information that we deliver on this for our platform. And it also breaks down, there's all kinds of metrics, fundamental data, liquidity, but these are based on some of our attributes of things out there. And I just show you this because this is important while we ramp down in today's live stream is, yeah, fundamentals are important. And if we go to the stock screens, this is really what it's all about in understanding. So we have these multiple different screens that you can, and we have all of these screens are in that spreadsheet that comes with the service. So you can find and locate stocks. You can go through and map the stocks out to the best of breed stocks that work in the system, all that kind of stuff. And we have US GARP, which grows at a reasonable price. We show you the asset class ranges that they all go in. And one of our biggest favorite screens is this magic formula, and there's actually a website on the magic formula. This was something that was made famous. I forget the guy's name, but it's pretty popular screen. So we've got some of that stuff as well out there, and this is really good. I think we have something that's kind of the Buffett style screen, but this is all the different ideas and screening. And you can go to our Portfolio Expert website and you can see all of this stuff here that I've got on the screen. It's open to the public, so you can go in and see exactly what's going on. We talk a lot about durations on our models and ultimately wave tech ratings and different types of things here. So there's a lot to it. And one of the things that we continue to really talk about from that standpoint is bringing fundamentals, the quant, all this stuff together, and that's how you make money. And that's never been more important than right now, because these markets are so selective and so tough, it's really hard to go from there. So we're 7 minutes out from the close. I'm just looking at some of the chat out here to see what's going on. Yeah, just give me a minute. Just look at a couple of things, see if I can answer any questions that you guys have. Yeah, David, I think it probably takes, depends on the time you spend, probably takes a couple of weeks. We're glad to talk to you, so you can always send an email, info@kendallreport.com. That'll get it, and we can find out, maybe even get you a ticket into one of our private training sessions that we do. Yeah, Mr. Tater, thanks for that, by the way. It looks like European drug regulators are reporting looking into new possible side effects of the mRNA shots. There's a lot there. It's YouTube, so I can't say anything. I am working on putting a Rumble site together, actually, and just so we can be a bit more open. Not that I want to say anything. I'm not a scientist. I have no clue, right? But there was actually some reports out on the CDC website yesterday that were somewhat interesting. So that'd be really good, David. Just reach out to us, and we'll definitely do that. That's good information, Mr. Tater. That may be why it continues. Let's just bring. I mean, how good was that these guys get the symbol mRNA? I mean, it's all about it, right? And like I said, I was going down a path, so we'll kind of close out here. Is that Moderna, J&J, Pfizer? These are part of the government industrial complex now. These guys are making tons and tons of money, and it's just going to be shots after shots after shots from now until forever. And it's pretty obvious, I think, from that standpoint. And but yeah, so I just I have to find out if I can do like live streams on Rumble. I'm brand new, just set up an account a week ago. Actually haven't done much to look at it. But so we're down at 387 on Moderna. Let's go to let's have fun, and let's go to a 5-minute graph here. Let's go see if I can find a time increment that displays the steepness of this. Right off the open, selling, definitely on a 15-minute graph. Trying to set up a little bottom here, though, so we'll see how that plays out. Yeah, see if there's any final questions. I'm just reading through the timeline here, so bear with me a minute. Yeah, so just real quick, would you assemble a living IPO portfolio in the subscriptions? That's a good question for Jay. So if you reach out, info@Kendall Report, maybe he and I will talk about that. He's the Jedi Knight of that stuff. So we'll leave that to him. Yeah, it's interesting. Yeah, DuckDuckGo would be a good place. Anyway, I wish we could have an open conversation. The thing that I really want to do, and I mentioned this earlier, and it sounds like you folks would enjoy it, is to do a call-in. I did one, and probably what I'll do is put out an audio-only link for a Zoom meeting, and then I will share that on screen, and possibly even, you know, that's the thing. The scary part is you get somebody who wants to be nasty on here, but, you know, I think we've got a pretty good community. Yeah, I'm just looking at some of the stuff here. Yeah, just a quick, my front end, if you weren't around for the commentary earlier on, is I do see the inflation continuing. Certainly they're going to do this reconciliation deal. They're going to spend $3 or $4 trillion. They're going to put it out there. There's a lot of what I call welfare programs. I mentioned that. So make sure you go back and watch that first hour. That'll be a good place to watch for sure. Yeah, I really have to spend some time trying to figure out this Rumble situation, because maybe we'll rotate to there. Also looking to maybe do some things on TradingView. They now, I think they're working on a beta. We've got some courses that we're working on, trying to put some things out as well, how to use PPMs and all the indicators and all that stuff, and then also working on masterclass and trading, a bunch of stuff. There's just stuff that I want to get out there to the community, and there's free and paid content. It's all going to be out there. It's just a lot of work in the background going on right now. So let's see if here's someone's asking for PFF. I'll do a quick daily. We actually missed the close, having so much fun. I'll flash over to that to see how we're doing. Yeah. So what is PFF? What is, it looks like it's iShares Trust. Can you tell me what this is for? I don't really see much. It's trying to turn up, just another sideways piece of junk. Let's go over to the, so up 1025. They managed to get a little bit at the end of the day here. Let's go over and just take a quick glance at the markets, and then we'll call it quits for the day. Yeah, we're S&P up 1099, 44.47, so all-time new high. Close up 0.25%. We continue the creepy crawler. Dow Jones up 219. NASDAQ negative slightly. Russell turned positive, up 0.5, with the composite down. So that spread continued to get better. Where'd we go out on the Russell? 2250. So I talked a lot about 2258 is going to be the magic number. Above that, we're looking at 2270 plus. So anyway, folks, thanks for joining me today. I always have fun on these things. And yeah, it's always fun. So, you know, I think the markets have gotten so boring, or everybody's lost their money. We used to get about 1,000 live, and maybe, yeah, whatever. Folks are working again, I think. I think there was a time last year where a lot of folks were hanging around. So anyway, thanks for everything. Make sure you hit that thumbs up, subscribe, hit that bell so we can, when I come up live, I'm pretty much doing live videos every day. So if you do want to catch it, you can watch the replay. But that, if you want to see the lives, Typically, I've been trying to start at 9 o'clock Eastern. I may move that to 9:30 just because I'm waiting for the database and I can't get some of the data to get ready for the show. The last couple of nights have been somewhat frustrating. Our data vendor is on the East Coast. They usually get things pretty early, and we start pinging the servers literally at 7 o'clock looking for data. And when it finally as soon as it gets there, we load it into our servers and start running everything. And just for those metrics that I get out of the database every night are so important to me and understand what's going on. Last night we were at 36%. We need to be above 42. We'll see if we get any traction back. We've been bouncing back and forth. See if this little bid that we caught at the end of the day works. So we will. I will come on at 9. Well, let's just say 9:30 tonight. So if you're tuning in, make sure you subscribe, hit the bell. I'll come in and do that. And I appreciate once again everybody that were here today and continue to be part of our channel. Thanks again, folks.